Today, we're talking about the 3 essential accounts that everyone needs. Whether you're in your 20s, 30s, or a little bit north of that, you need to know how to leverage those accounts and what their purpose is. So stick around and make a deposit on the like and subscribe button. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you can only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the bank of the community. Hello, I'm Brent Cannon. I'm the President and Director of Community Bank here at National Bank of Arizona. Thank you so much for joining us today. Today, we have a returning guest, Paul Bradshaw, our manager of our Central Branch in Phoenix.
Thanks for having me again, Brent.
Yeah.
Appreciate it.
I thought the first episode was great, full of great information. I think this one's going to provide the same level of information.
I agree.
Just so everybody knows, we are not professional podcasters. We are, in fact, professional bankers. Paul is a professional banker. We work with clients every day.
Every single day.
Yep.
Not a podcaster, not even a little bit.
So today we're talking about the 3 essential accounts that everyone needs in banking. So kick us off, Paul. What are those 3 accounts?
Yeah, it's going to be a checking account, which is your average everyday operating account, one that everyone needs.
Yep.
Savings account, which is going to be for short-term, long-term savings, and then a tax advantage retirement account.
So those are a great start. So let's give specific tips for each account that people should be thinking about when they're thinking about choosing a bank and choosing those accounts.
Absolutely. I think first, though, get with your banker.
Okay.
Talk to them. See what the options are.
Okay.
Right? You're going to want to make sure with that checking account that you have looked at your monthly fees.
Yep.
You want to make sure, what's that ATM access look like? Does it have online banking? Very basic necessities, but very important to know about. If some of those accounts do have some perks or some benefits that you maybe didn't know about, that banker can go through and explain those to you.
Right.
But you may also have a scenario where you run into where you don't know exactly what the checking account does. And then there's a shortcoming later in life, right? Something may happen and you didn't know how the account functioned. It's good to get that upfront knowledge with your banker.
Sure.
That savings account, you're going to want to make sure you always look at the options. See what you have. See how much money you're going to be putting in that account. And also plan for what you're saving for, right? If you're going to be planning for a vacation or a trip, or you're looking to maybe just save for a new vehicle or something down the road. Is that what you're saving for? Or are you also looking for maybe an emergency fund?
Right.
Are you trying to put away some money in case of, maybe something happens with the family, something happens, and life just decides to kind of happen.
And I suspect when we're talking about savings account, Paul, that people are probably concerned with what the interest rate is, what they're getting paid as they save, right?
As they should.
Yeah.
So, take a look at the options and take a look at the time frame.
Right.
So if it's something that you're going to need in the next couple of months, potentially a CD, but maybe you want to see if that savings account offers a high enough yield for you that it's going to make sense.
Right. And just a general rule, and we all know this, generally the bigger the account, the more the account can earn, not only because the principal balance is bigger, but generally banks pay more for higher balances.
100%.
So that's, another incentive to keep growing that savings account.
Exactly. I think one thing people should be mindful of, though, with a savings account is make sure you know how many withdrawals you can make out of that account.
Right.
So with regulations, it's normally 6 that you can make out per statement cycle. So make sure that you know where that cap.
Yeah, that's a really good thing to understand and know. So thinking about retirement, the third type of account, tax advantage, I think you said.
Yeah, absolutely.
Talk about that a little bit.
So main tax advantage account most people have is a 401k through their employer.
Right.
If it's not through a 401k, then it's going to be typically an IRA account.
So share some pro banker tips for managing and allocating funds to these 3 different types of accounts.
Sure. We have something called the 50-30-20 strategy. 50% needs, 30% wants, and 20% savings.
Right.
Yeah.
So, I guess this is a pro tip. People really need, when they're building that 50-30-20 budget, they really need to be honest about what the difference is between a need and a want. Talk about those 3 accounts, how you kind of allocate the funds between a checking, savings, and potentially retirement.
Sure. So out of the checking account, that's where you're usually paying your bills. Okay. So you're going to want to make sure all the needs, all the bills are set up. You can do that through bill pay, a lot of different options, but make sure that those come out of the checking account.
Okay.
And then for your wants, it really just depends if that's short-term or long-term. Right. If it's short-term, make sure that you have those funds allocated ready to go so that you're not, going over your withdrawal limit out of your savings account, but make sure that you have, the availability ready to go when you do want those things.
So it needs to be liquid.
It needs to be liquid. Absolutely. Now, when it comes to savings, make sure that that 20% that you're putting away goes into the right type of savings account.
Right.
Depends on how much 20% is for you.
Right.
But make sure that it does add up over time and you're getting the most benefit from it.
Right. And that's the long term.
Exactly.
Yeah.
Yeah.
So just, I really want to clarify the difference between short term and long term and how people should kind of think. I'd like to hear your perspective on that.
So for our purposes, I would say a short-term savings could even be saving for a house.
Okay.
Right. Even 5-10 years out from now, if you're looking to put down a big down payment, that would be short-term.
Gotcha.
Now, it's long for some, but in general terms, we're going to stick with short. But if you are talking long-term, 6 years, 10 years, 20 years, 30 years, a lot of options for that.
So the long term, we're thinking about kind of that retirement age, whatever that is for someone. It's different for everyone.
Right.
But basically, they don't have their normal stream of income coming in. Yes. And that's where that long term savings, otherwise known as generally as retirement savings, tax advantage savings, comes into play.
Exactly.
The importance of that is that's what's going to fund your living expenses.
Exactly.
So that's really the definition of long term is, when do you plan on not having a regular paycheck coming in?
Exactly. So when that time comes, though, you do want to make sure that nest you've prepared is fruitful.
One of the things that you mentioned was the emergency fund.
Yes.
And I really want to hit this point because I think too many people don't plan for the emergencies and all of the things, the unforeseen events that can happen in our lives, transmission blows, medical event. These things, nobody likes to think about that, but it is so, so important. And I would just encourage people to really be aggressive on what that emergency fund should look like. Different people have different rules of thumb, and I'm not going to provide that rule of thumb, but it needs to be sufficient and probably needs to be sufficient to also cover people for a period of time that maybe they're unemployed.
Correct. I think that's huge. A lot of people, they don't understand that about a third of America can't even afford a $400 emergency.
That's exactly right.
That's a scary thing to think about.
Yep.
But as long as you're putting that money away, you make sure you have that nice savings account. If you do go unemployed, how are you going to provide for yourself, potentially your family?
Right.
What are the outcomes of that? And if you do have that, laid out for yourself, you are going to be okay during that time while you're looking for a new employment or you are, in a time of struggle.
Right. I don't know that there's a better way to have immediate peace of mind than having these 3 accounts taken care of, funded properly, managed. It will help people have a peace about kind of the direction they're going in life. I'd like to get your thoughts on the 50, 30, 20. It's a rule of thumb, but I really like to kind of hear your perspective on that breakdown. And is 20% too low?
For some people, it might be a little bit too low if you're trying to get that 3 to 6 month savings put together faster.
Right.
So if you're trying to get that emergency fund ready to go, it may be too small. It may take you too long to get there. So if you want to get there a little bit quicker, you may need to allocate just a little bit more.
Gotcha. I guess, the 50, 30, 20 is a framework.
Yeah.
But for each individual, they need to look at it. At the end of the day, they need to buy into this discipline that I need to think about savings. I need to understand what my needs are in terms of the bills I have to pay.
Exactly.
But I need to think about saving for not just for today or for tomorrow, but in the future. And that's kind of the point of this.
Yeah.
The point is it's a balance. The point is it's not 100% wants.
Yeah.
And that's unfortunately where too many people are at. They're living paycheck to paycheck, spending money they don't have through credit card debt and other short-term debt that's very high interest rate. They're effectively going backwards.
Yeah.
And that's really the point of this.
Absolutely. And I think if you don't know how to get a handle on it, seek help. Right? Look for someone who has the knowledge, the power to do that for you, and can actually break everything down that you're spending money on.
Yep.
Get yourself a budget, put that together, talk to your banker. They can help you look at all of your funds and they can see where your money's going, right? They can tell you have automatic payments for X, Y, Z, and you may not even have known about it.
That's right.
All the subscriptions that you don't even know about that are just coming out of your account, those can be easily mitigated. But you do have to take the time to sit down and go, what is my money going towards?
Right.
Because it could be a want, but you see it as a need.
And, for some people, this is embarrassing.
Yeah.
I'll speak for myself. Everybody that's ever grown up and become an adult has probably made some financial mistakes,
100%.
myself included. I'm guessing you've probably made some
Absolutely.
financial mistakes. It's nothing to be embarrassed about, and that's the great part about talking to your banker. We're a little bit like doctors. We've seen lots of personal financial statements, lots of credit reports.
Oh yeah,
and
not
we
too many
can
shocking things.
That's right. We can help and add value, and kind of a judgment-free zone. That's
Absolutely.
where we live,
Yeah.
and we want to help. We want to help people get on the right track.
I agree.
So, Paul, in your experience as a banker, what are some of the common mistakes that you've seen people make, and maybe help them avoid?
One of the biggest ones, overdraft fees. I think a lot of people, they just don't understand that you can easily mitigate that by just putting some alerts on your account.
Yes.
Take control.
Yep.
Go on your online banking, make sure that you know when something's about to drop below a certain level so that you do understand where your finances are at all times.
Yeah. That's really good advice.
So another thing is failing to take advantage of the benefits of an account. Because if you don't know what's there, you probably are going to be missing out. One of the
Right.
big things, our gold checking account, big benefits there. One of them, rate discounts. You're going to get boosters on your interest rates and mortgage closing cost help.
Right.
It's awesome.
That's really good. And I know we talked about the features and benefits in quite a bit of detail in the previous episode.
Yeah.
So go back and check out on our last episode, checking accounts. There's some great information there.
So lastly, savings. Often it's neglect. Sometimes people don't save. They just forget to, or they don't want to.
Yeah.
Keep yourself accountable. Put some automatic transfers on your online banking that come directly from your checking to your savings account, because that's where your paycheck's going. So make sure that you allocate some of those funds every single month or every single, bi-weekly or weekly, whenever you get paid, that goes straight to the savings account.
Yeah, I think that's great. And, I think just general comment, this is all part of, it's all part of being an adult.
Yeah.
And it's part of being responsible. When you, I use this analogy with people that are close to me. It's a little bit like going to the dentist, getting your teeth cleaned, doing the checkups, going to the doctor. This is kind of the financial doctor checkup.
Yep.
And it's what you do, and you make sure you have kind of everything lined up. And to your point, there's a lot of automation you can build in.
Yeah.
With things like balance alerts, automatic transfers. This is how you kind of get this stuff taken care of, but don't ignore it. Pay attention to it.
Exactly.
Check in with your banker. We will do a full review. I'm sure, if you go see your banker, do a full review, make sure you have everything taken care of.
We'd be happy to do that review. Make sure that you are saving for what you actually need, and make sure that you are saving for that emergency fund.
That's right. So, Paul, I just want to thank you so much for joining us today. It's been incredible information. This is really, really important information for consumers and small business. We make the mistake of thinking that people, or believing people, understand these pretty basic products.
Yeah.
But if you're not in the banking industry, you probably don't know the ins and outs. And I think the information you provided today will help a lot of folks. Thanks so much for being on the podcast.
Thanks, Brett. Appreciate it.
So that's it for today, folks. Thanks so much for joining us. Don't forget to like and subscribe, and check us out on your favorite podcasting platform or YouTube.